Joining us to discuss is Barclays analyst Stephen Valiquette. Stephen, good to see you on this. I mean, the market clearly expressing some concern, if not over the direct earnings impact on CVS from this particular move, then maybe some kind of questioning of the PBM business model or what the attention on this area of healthcare is going to mean.
Yeah, good afternoon. Thanks for having me. Yeah, we've tracked the PBM industry for, almost 30 years now. We've seen a lot of perceived threats throughout the years. There's a lot of barriers to entry, certainly a scaled business. Amazon's kind of popped up a couple different times as a perceived threat. At the end of the day, the PBM industry, these companies are making roughly $3 of profit per claim, and that gets sliced and diced a bunch of different ways. But there's huge scale to generate those profits. What I would love to see over the next couple of years would be the profit per claim on this new consortium of entities that won this Blue Cross Blue Shield California contract. See how that shakes out over time. But that's kind of our quick thoughts, at least from a sort of headline perspective.
Sure. So what you're saying is that there really isn't as much of friction created by these prescription middlemen in there. In other words, there's a perception out there. There's a lot of waste that they're taking a toll on the healthcare economy just by being there and not necessarily maximizing efficiency or optimizing cost.
Yeah, PBMs make very little money at all off of retail claims. And even their share of rebates is also a very small percentage of profits. There's some legislation out there that's going to potentially further whittle that down. So that's not really where the economics are for PBMs nowadays. And I know a lot of that press release coming out of Blue Cross Blue Shield of California kind of alluded to some of those areas. But at the end of the day, it's really the specialty pharmacy is probably the biggest source of profits. And that's the part that CVS is actually retaining within this contract. And that's where they have a lot of scale, a lot of core competencies. And also just on traditional mail is also the other major source of profits for the industry. So, yeah, PBM has been a very misunderstood industry for a long time with this perception that they're making just a ton of profits off of retained rebates and these other factors. And it's just not really the case.
Well, I mean, I guess how do you explain that? This pretty dramatic market reaction, massive volume in CVS, which already looked like a cheap stock. Now they're reaffirming guidance. It seems like if those earnings come through, it still looks pretty cheap. But also Cigna, which owns Express Scripts, also down 6%.
Yeah, I've seen this movie several times over the past, 5-10 years or so. I wish if we created a portfolio, at least in healthcare, I can't speak for all industries, but every time there was a panic sell-off on some of these, smaller competitors, at least in healthcare, and Amazon specifically, there's pretty good money-making opportunity on some of the recovery. So, pretty much every time now the bark's been worse than the bite. And it all comes down to the costs and ultimately, the pricing within the industry. And these large companies have just been at it for so long with so much scale. It's harder for new guys to step in and figure out a way to still do it profitably.